The Monetary Policy Committee of the Central Bank of Nigeria, led by the Governor, Mr. Olayemi Cardoso, met for the third time in 2024 to review recent economic and financial developments. After the two-day meeting, the monetary policy rate was increased by 150 basis points from 24.75% to 26.25%. Cash reserve ratio for deposit money banks was retained at 45%. Liquidity ratio was left unchanged at 30%, while the asymmetric corridor remained at plus 100 minus 300 basis points around the monetary policy rate.
At this meeting, the committee was thus faced with the option of either continuing with policy tightening or hold to observe the impact of previous rate hikes. Following an extensive review of risks and the near-term inflation outlook, the balance of risk suggests further tightening of policy to build on the benefits accruing from previous rate hikes.
And some cheering news as the governor announced a decline in inflation rates between the month of March and April, attributing this feat to the monetary tools being used by the bank to address the growing inflation rate.
Much as we see an increase in the inflationary figures, when you go down to the specifics in terms of food, in terms of core, in terms of headline inflation, you see that it is moderating and decelerating in increment. Okay, and that's the good news. The tools that the central bank is using is working. It is working. Now, I've said several times, and I'll say again, there's no magic wand. These are things that need to take their own time. I'm confident, and the figures show it themselves, that we are beginning to get some relief.
Another highlight from the meeting is the committee's acknowledgement of a safe, sound and stable banking system. The Apex Bank's recapitalization move was also commended, as it is expected to promote macroeconomic balance.
As the central bank, it is our responsibility to ensure that the banking system is strong and is resilient. In terms of what we have done with respect to recapitalization, of course, we're looking forward and saying that we need the banking industry to be a lot stronger and more robust, particularly considering the $1 trillion economy that the federal government is anchored itself towards. We have gotten much of the feedback from the banks with respect to what their plans are, and again, to emphasize to those of you who may not remember, we gave them a long gestation period really to do this, and we are hoping that whole capitalization program will be wrapped up within 2 years.
The governor noted that a strategy to increase foreign currency inflow into the country through diaspora remittances is ongoing and is expected to double before the end of the year. The committee is also working on ensuring a stronger regulatory framework to enhance the operations of financial technology fintech to control illicit flows and tighten surveillance. The next Monetary Policy Committee meeting is expected to hold on the 22nd and 23rd of July 2024.